Right, looks like we're streaming.
Okay, well, look, I guess it's been a long time since you guys have seen me on live. And by long time, I mean 3 minutes ago, but I'm back. We are live with Rosie and Tish. Hello, Rosie.
Hello, how are you?
Good, good. And Rosie is from IDA. And so she will be going over down payment assistance programs with us. And if you guys were just on the live 3 minutes ago, you already know who Tish is, but I'll say again, this is Tish from Guaranteed Rate. And she is an IDA approved lender. So this is why we have her in here on this second live. We've been talking because IDA introduced a new program in December. Is that correct? Which is the Smart Buy program that assists buyers with paying off student loan debt. So that's one of the programs that's fairly new, but of course IDA has been around since forever. So there are many other programs if that's not one that's for you. So we have you here to discuss some of that.
Well, thank you. And thank you, Nikki, for inviting me. Again, I am Rosie Verdon. I am one of the account managers with IDA. And we are here today to talk about the different down payment assistance programs that we have available. Mainly the two new programs that we have. The first one is Smart Buy, as Nikki mentioned. This program provides for down payment assistance and student loan debt relief. That's one program I'm going to talk about a little bit more here in a little bit. Then we also have another program. It's just down payment assistance that can help towards your down payment or closing costs. So again, these are the two new programs that are available. All of the down payment assistance programs that we have available are available in every county in the state of Illinois. All of our programs are available to first time buyers and repeat buyers. So you don't have to be a first time buyer.
Okay. Okay.
I
So
think that's what a lot of people think when they think of home buyer assistance, that it can only be for first time home buyers.
Yes.
right. Yeah. No, thank you, Tish. Yeah. A lot of folks do think that, but our programs, you can currently own a home. And if you are looking to buy a new, but it has to be primary residence, owner occupied property. If you're looking to buy a new owner occupied primary residence, and if you currently own a home, yes, you can use the IDA funds for the purchase of your primary residence owner occupied property. So the first program I like to talk about is the down payment assistance program. It's a flat $6,000. With the $6,000, it has a 5-year forgivable lien. So what that means is if you stay in the house for 5 years, after 5 years, you do not have to pay back the $6,000.
Okay.
If you refinance before 5 years, or if you sell the house before 5 years, you have to pay a portion of it back. Not all of it, it's just a portion. So it's prorated on a monthly basis. Again, perfect program for those that are looking to buy. Maybe you don't have any student loans, but you're looking for a little bit of down payment assistance. Our funds can be used, again, towards down payment or towards closing costs or a combination.
Okay. Let me ask. It's a question slash comment. So a lot of times we use the term free money interchangeably. This is not free money. It's an assistance that could end up being forgivable. Different programs are either forgivable, deferred, or you're going to be paying on them monthly.
Correct.
So with each program, it's just tailored to what the potential buyer's needs are, but it is not free money. So myself also, I have to get out of the habit of using interchangeable words. It's definitely not free money.
Yeah.
Right.
Thanks, Nikki. Because another word that a lot of folks use is grants.
Mhm.
So it's not really a grant because you might have to pay it back.
Right.
So we always refer to it as down payment assistance. And
Yeah.
like you mentioned, depending on which program, there is that forgivable period. So it could be 5, could be 10 years, but it is down payment assistance. And depending on which program you go with, you might have to pay part of it back.
Absolutely. So I'm glad we cleared that up because, like I said, sometimes I'm guilty of free and grant, which that's not at all what it is. So just want to
Right.
clear that up really quick.
So as I mentioned, Opening Doors, that's a new down payment assistance program. That Opening Doors is just being added to our existing menu of down payment assistance programs. So we still have Access Forgivable. This Access Forgivable program provides 4% of the purchase price up to $6,000 in down payment assistance.
Okay.
This program has a 10-year forgivable lien. So we still have it out there, but you probably don't want to use it. You probably want to go with Opening Doors, because Opening Doors is $6,000 with a 5-year forgivable lien. But it's still out there for whatever reason. We're going to keep it out there.
And then you say lien. So for those who don't necessarily know what that means, you guys are a second mortgage as far as the down payment assistance. So you're behind whoever their lender is on the mortgage.
Yes. So we are a second, and it's considered a soft second, because on our soft seconds, there's no monthly payment that's due. And it gets, that usually falls off after a certain number of years. So again, on the Opening Doors, it falls off after 5 years. The Forgivable, it falls off after 10 years. And with these payments, with this program, there's no monthly payment tied to it.
Okay.
Okay. And Rosie, I just wanted to throw this in there and pose this question because I do have some clients that ask this all the time. Well, how will they know if I'm gonna pay it back or not? People want to know. They don't really understand what the lien means or the soft second, but just letting them know that you are keeping track of that, right?
Yeah.
So you know what happens on the property.
Yes. So yeah. So we do know because that lien is out there. So a lien is something that's put against your title. The title to your house shows any loans that you're getting using the house. That's what that title shows. And IHDA second is going to be the lien that shows up. So if you try to do any, sell the house or whatever, we're going to know about it.
Right.
Which brings me to another thing. And I know a lot of people who have like IHDA loans from years ago, who are maybe looking to refinance right now. If you're going to refinance, you have to pay off this down payment assistance. Sometimes, and there's this term, it's called subordination. We don't allow for subordination, which means, so again, there's that first lien, and then we're in second position because we're giving you the soft second. So let's say in 5 years let's say in 2 years, you want to refinance. The way the title works, that first lien is in first lien, the second is in second. When you refinance, you're paying off that first lien, so that falls off. IHDA, which is in second, automatically pushes up to first. Well, if you're going to be going to guaranteed rate, they always want to be in first position because our $5,000 compared to their $200,000 lien, they want to have it be in first position.
Right.
So sometimes though a lot of, if you want to do a refinance, you're going to try and subordinate to keep us in second. I know it's a lot of information, but we do not subordinate. When you go to refinance, you have to pay us off.
So he's like, if I were to refinance you and you receive this down payment assistance, instead of me going to IHDA saying, hey, would you mind staying in second position again and let me get first? Instead, we want to make sure when we refinance, we say, hey, IHDA, guess what? We're refinancing this loan and we're paying you guys back. That's what we want to do.
Yeah. Exactly. Yes. Thank you. So again, that applies to all of our IHDA loans. Okay, so as I was mentioning again, the Access Forgivable program that is out there, in case you want to use it, it is out there. The other program we still have available is the Access Deferred. This one provides 5% of the purchase price up to $7,500 in down payment assistance. So this program, the $7,500, is deferred for 30 years. So what that means is that at some point, you, the buyer, will have to pay back the full $7,500. So you can pay it off. If you decide to refinance in 10 years, just pay it off when you refinance. If you decide to sell your house in 15 years, just pay it off when you go to sell your house. If you keep your loan for the full 30 years, you'll have to pay it at the end of the 30 years. There's no interest that's added, but you will have to pay the full amount back at some point.
Well, that was going to be my next question. Are these down payment assistance coupled with any interest or anything like that?
Yeah, no, all of the down payment assistance is zero interest.
Okay.
So yeah, no interest is added. So the last option we have is the access repayable. This one provides 10% of the purchase price up to $10,000 in down payment assistance. It is repayable, so you are paying it back on a monthly basis. It's going to be a separate payment. You're going to have your first mortgage payment and you're going to have the second mortgage payment. So $10,000, these have a 10-year term at 0% interest. So $10,000, 10-year term, 0% interest. The monthly payment would be $83.33 a month.
Oh, that's not bad.
That one is actually my favorite because where can you go to get a 0% interest loan for $10,000?
Yep.
It's like it makes perfect sense if you are able to get that one. Yeah.
The one, yeah. So
So
let me ask you, you mentioned the earlier, the first one was the smart buy and everything like that, because by that being very new, there's a few discrepancies here and there, because with anything new, there's a learning curve, understanding the purpose of the loan and the assistance and everything like that. So it can be for anyone who has a student loan up to $40,000. It's 15% of the purchase price for that loan. And then we've saw you talk about this before, so we were able to clarify that it is only for the actual person that's taking out the mortgage. So it can't go towards your parent plus loan or anything like that. It actually has to be the person that's taking out the mortgage.
yes.
Okay.
Yeah. So again, smart buy. This is what we're going to talk about next. So the other programs that I talked about are just down payment assistance. The student loan piece is not tied to those. It's just down payment assistance. And then I also want to mention, with all of our IHDA loans, we allow any lender to participate, but not all lenders want to participate, which is fine. So we have a list of preferred lenders to be able to originate any of our IHDA loans. Tish is one of our preferred loan officers. So in addition to being just on the overall approved lender list, the Smart Buy has a certification to it, an additional certification. And Tish is also one of our certified loan officers. So the Smart Buy program, we only allow certain loan officers to be able to take applications. Okay. And again, call Tish. She's going to be able to answer all the questions. So again, Smart Buy, as with all of our programs, IHDA programs, we only offer 30-year fixed rate. We don't allow for 15. We don't allow for 20-year. No adjustable rate mortgages. It is just a 30-year fixed rate mortgage. And the rates, we set the rates. All the lenders offer the same rate, depending on the program, but we set the rates and we provide those rates to the lenders. So the Smart Buy program has two pieces to it. First of all, it's $5,000 in down payment assistance that we give you. The $5,000 can only go to pay off down payment or closing costs.
Okay.
It is deferred for 30 years. So what that means is that at some point you will have to pay back the full $5,000.
Okay.
Okay. So that's the $5,000 down payment. The second piece is a student loan assistance piece. With the student loan assistance piece, we will give you 15% of the purchase price up to $40,000 to pay off your student loan debt. The one thing with this program, as you mentioned, we have to pay off all of the borrower's student loan debt. So this program might not be, a fit for those that owe $80,000 in student loan debt. It's a niche product, but because of the fact that all of the borrower's student loan debt has to be paid off.
Yeah, I owe a pretty penny in student loans, so it wouldn't be something I could use per se. But if you're a person that's, has 30, 20,000, even 40, and depending on how much your purchase price is, it could be definitely beneficial.
Yeah. So again, the student loan piece is 15% of the purchase price, as you mentioned. So let's say you have a borrower who has $40,000 in student loan debt. They only qualify for $200,000 purchase price. So 15% of 200,000 is $30,000. Your borrower owes $40,000. Typically, they wouldn't qualify for this program, again, because all of the borrower student loan debt has to be paid off. But if they can get a gift for the $10,000, you'll have to, because all the student loans get paid off at closing. You can bring that to closing if you have access. So again, it's based on the purchase price. So if you can get a gift, bring that to closing, you'll be able to qualify for the student loan assistance piece. A question that I get all the time. I have 3 student loans through U.S. Department of Education and through 2 student loans through SoFi. Can I just pay off U.S. Department of Education? It has to be all of the student loan debt. Okay. Everything that shows up on the credit report, everything has to be paid off.
Can it be private lenders or just regular government student loans?
It can be, so it's considered a private lender. So yeah, it's going to be, if it's considered a student loan debt on your credit report, has to be paid off.
Okay.
But if you got like I guess like a personal loan, why would you do that? I have no idea. But if you got a personal loan to pay off your student loan debt, and on the credit report it shows personal loan, that can actually cannot be included.
Okay.
It has to show as a student loan.
Okay, that makes perfect sense.
So another scenario. So let's say you have a borrower that owes $10,000 in student loan debt, and there's a co-borrower that owes $30,000 in student loan debt. They only qualify for $200,000 purchase price, so they're only going to get 15% of that, which is $30,000. They have the option, again, to pay off either one or the others, all student loan debt. So in this case, just pay off the co-borrower student loan debt because they owe $30,000. Leave the borrowers $10,000, leave it alone, keep making payments on that, include it in your debt to income ratio. We can leave that one alone, but all of the co-borrower student loan debt has to be paid off.
Okay. That could start a fight with somebody, but
Uh-huh.
I understand that.
So the last scenario I want to say is, so let's say you qualify for $200,000 purchase price, so you're going to get $30,000. The borrower owes $15,000. The co-borrower owes $15,000, $30,000. Combine them both, pay them both off.
Gotcha.
Nice.
Makes sense.
So,
Let me
yeah.
ask a question to Tish, or either you or Tish can answer the question. So a lot of the things that we hear is that it's possible that if you get an IHDA down payment assistance, that going through that is a higher interest rate, for mortgage or what have you like that. Is that something that's a huge concern from either one of your aspects, especially since mortgage rates are pretty low anyway at this point?
Let me tell you, I have worked with IHDA for years. We loan officers, we never like to quote rates because it has to be based on your individual situation. But IHDA's rates have always been competitive. You can't say that their rates are higher than anyone else's or that they are being biased with their rates. They are very competitive, very flexible. They know their target market, so they want to make sure that everyone can afford it no matter what. Their rates do change. Every day it could be something different, but it's in line with what the market is doing anyway. So right now, IHDA rates are considered pretty low. They really are.
Okay.
Yeah.
But if you really want to know what the rates are, give me a call. We'll talk about it.
There you go. So again, the student loan piece, again, it's based on the purchase price that you qualify for, and it's 15% up to $40,000. The student loan piece comes with a 3-year promissory note and deed restriction. So what that means is if you stay in the house, don't sell the house for 36 months, that $30,000 or $40,000 of student loan debt gets forgiven in 3 years. Stay in the house for 3 years.
Nice.
I'll do that. Sit still for a little bit and you're out of student loan debt and you have a house.
Yeah. I always say, I'm like, geez, where was that when I needed it?
Yeah, I mean, could you think about that? Because my payments for student loan, projected payments are like 523 or something like that a month, and that's a lot of money to be paying in student loans. So imagine having to pay 523 plus a mortgage, plus insurance, plus all of your other expenses. So eliminating that student loan monthly payment, that's big.
Yeah. Oh God, yeah,
Definitely.
yeah. So
Yeah,
again, stay in the house for 3 years, the student loan debt gets forgiven. Love that part.
I love it. I love it. Well, like I said, it's Friday. Was there anything else you wanted to add? Common questions you get or common concerns with any of the down payment assistance programs?
Well, here, I can tell you a couple things here. So on the student loan piece, let me tell you on the student loan piece, you have to have at least $1,000 in qualified student loans. You have to be current on your student loans. So when you come in and apply, your credit report has to show that you're current. But if your loan is in forbearance or in deferment, we consider that as current.
Okay.
Okay. So as I mentioned, we have a purchase price limits and income limits. So the income limit, you cannot make more than a certain dollar amount. And this applies for all of our IDA loans. So for the Cook, Lake, DuPage, Kane, McHenry, and Will counties, combined income of all the borrowers cannot exceed $109,200.
Okay.
Okay. So if it's one borrower, it's 109,200. If it's two borrowers or more, it's still 109,200.
200. Okay.
Then we also have purchase price limits. We don't have loan limits, it's purchase price limits.
Okay.
So the purchase price limit for on a single family home for the Cook, Lake DuPage, Kane, McHenry, and Will counties, it's $326,781.
And that's for single family, right?
So single family.
Okay.
So single family. So if you have somebody who comes in with a $330,000 purchase price and says, hey, I can bring the $44,000 difference to bring it down to that $326,781.
No.
No, purchase price, like purchase contract cannot be more than $326,781.
Okay.
And it is for a single family home. We'll offer single family home, townhouses, condos. We also allow for 1 to 2 units. So you
Okay.
can buy a 2 flat. But again, the IDA money is supposed to be used for the purchase of a primary residence or occupied property. So you have to live in one of the units.
And what's the limit on the 2 flat? I assume it would be a little more.
For the 2 flat, for the Cook, Lake DuPage, Kane, McHenry, and Will counties is $418,333.
Oh, okay. All right.
With any of our, other than Smart Buy, all of our other down payment assistance programs, those can be layered with an FHA loan, a VA loan, or a conventional loan, the down payment assistance programs.
Okay.
The Smart Buy program can only be conventional financing.
Okay.
So right now it is only conventional financing. We have reached out to FHA to see if they'll agree to the terms of the deed restriction. We're still waiting to hear back from them, but right now it is only conventional financing.
Okay, so let me get a little clarification for my understanding and something that others might be thinking as well. So if you have other forms, so let's just say maybe local down payment assistance, you can layer that with the IDA program as long as they agree to those terms, to your terms, and know that you're going to be second position for mortgage. Is that correct?
So we do, I'm sorry, go ahead.
I was just going to say to help out with that, the lender will tell you what you can layer it with and if you can layer, because certain programs require certain things. And as you're the realtor and the buyer, it's not really up to you to kind of like say, okay, I qualify for this, I qualify for that. No, we work with the programs and we work with IDA to make sure that it's okay for us to layer before it's even done. So we take that worry away from you.
Gotcha. Thank goodness.
Yeah, that's why Tisha's here. She's the one that knows it all. I'm her backroom support Tish is the one on the front. If she has any questions, she'll reach out to me. Other than that, I work for her. Whatever she needs from me, that's
Yeah,
what we're
everybody has their role. So
right.
I
Exactly.
build the houses, you guys find the money.
Yeah. So I'm trying to think a couple other things. With all of our programs, it is purchase only. I know people have always, especially with the Smart Buy, do you allow for a refinance? We're like, no, it's only for the purchase of a primary residence owner occupied property.
Okay.
Our conventional financing, we allow for the 3% down. So, it is conventional financing, but it is 3% down that we ask for. And then if you work with DACA recipients are allowed, do qualify for all of our down payment assistance programs.
Okay.
I'm trying to think, what else can I tell you?
You have to do the first time home buyer or the home buyers assistance
education.
Education. Mm-hmm.
Yeah.
Yes. Yep. It can be done, Tish can give you a list, but yeah, a HUD certified agency, some of the MI companies, Fannie Mae has a program, Freddie Mac also has a program. Everything is done online now, so pretty much go to anybody.
And the credit requirements, as they say here, 640 is the minimum credit score.
Yeah, so our credit score for all of our programs is 640. Whether you're doing FHA, conventional, that is our minimum FICO score. I'm trying to think, what else can I tell you guys? As you mentioned, we talked about earlier, if it is a Parent Plus loan, unfortunately, those cannot be included in the payoff. Even if it's the parents that are buying and they have the loan, the parent loan for their children, they won't be able to pay. Even if they're trying to use the Smart Buy program, they won't qualify. The student loans have to be for the education of our borrower.
Yes.
Okay, I have one more question and then I have to take off, guys. But my question that I get asked all the time, Rosie, you ready for it?
Yeah.
If I get IDA, can I pay it back early?
Oh, good God, yes.
Good question.
Yeah, if you get the IDA loan, yeah, it's no different from any other loans. You can prepay at any time. You can prepay the down payment assistance piece. If you have, the IDA first mortgage, you can definitely pay it off. The only thing is, again, if you do sell before the 5 years, or for our opening doors, you have to pay a part of it, the down payment assistance piece back. If you pay off the Smart Buy before 3 years, you have to pay off part of it, the Smart Buy student loan piece. It can be paid off, but you definitely want to check, because you want to make sure you're after that forgiveness period. And then here, I just want to say, here are the 3 account managers. It's Rachel Falzone, John Maxim, and that's me. In case you don't recognize me, after COVID, I decided not to dye my hair anymore.
Oh, that actually
it looks good
really
anyway,
nice.
so
really pretty.
So that is me, believe it or not. So there's my contact information, my email address, my phone number. If you have any questions, definitely reach out to me. Reach out to Tish. Reach out to either one of us. If you have any questions, we're here to help.
And as I said, of course, a moment ago, there is a link in my bio that will give you information to contact Rosie or any of the account managers in regards to down payment assistance. Tish's information as well, as she is an approved lender with the IDA program. So just, DM or however you want to contact us. My number is 708-971-3171, or you can DM Tish as well. You can give your phone number, but like I said, it's all listed. It's all listed in the chat. So you'll have access to any one of us to go ahead and get your home ownership process started.
Definitely. Well, thank you so much for letting me join you guys. I had fun.
Thank you guys for spending your Friday with me. I haven't even had dinner yet, but I had to go on and get this together for the people. So
And thank you for inviting me as well, Nikki. Thank you so much. And Tish, you know,
I
honestly,
appreciate
thank
it.
you for your continued partnership. We appreciate everything you do for us.
You are welcome. Thanks.
All right. Well, you ladies have a lovely night, and until next time.
All right. See you later.
Have a good
Bye-bye.
weekend.
Thank you.
Thank you.
Bye-bye.